welcome to this edition of Startup Central. I'm Nantara Rai. This is the only show of its kind on Indian television dedicated, of course, as the name suggests, to startups. We talk about innovation, disruption, technology, basically anything to do with the new economy. It's going to be here on your favorite channel, ET Now, every weekday at sharp 6 p.m. Ladies and gentlemen, like all the stakeholders of the community that we get on this show, the team that puts this very show together, the Startup Central team, thrives on constructive criticism. So keep writing into us to tell us how to take the show to the next level. Our email address right on top, suc@etnow.tv. Are cryptos the kryptonite in your network and portfolio? Yes, we are borrowing from Superman, the alien mineral that can diminish Superman's powers. But yes, it is what we're going to be discussing on the show. We have seen the global market cap of cryptos go from $3 trillion plus to less than $1 trillion. We've seen how coins are failing. We've seen how exchanges are failing. Look no further than VAULD, which just 24 hours ago ceased all operations. Trading, withdrawals, as well as deposits. Trading volumes, in fact, across the board are down. The Bitcoin, which was at $65,000, is now barely hanging on to $20,000. My colleague Sharath gets you the special report.
Well, in focus we have the crypto. First of all, do remember that ever since the new crypto tax rules have kicked in from July 1, the trading volume in the exchanges in India have fallen considerably. Now we see WazirX, CoinDCX and even Zepay, they have all reported almost a loss of 94% to almost 98% in the trading volumes, and that's an alarming figure post the TDS rules getting kicked in. Now do remember, in the crypto space, Bitcoin having a market value of almost more than 40% in the total sphere have seen a fall of almost more than 70% in the 8 months itself, and closely followed by Ethereum, which has also fallen by more than 75% over the last 8 months. Now do remember, the crypto transactions were above the rupees 10,000 mark will attract the TDS, and this was applicable from July 1 itself. And of course the threshold limit is there for the TDS deduction, which is there for rupees 50,000 for specified reasons. But apart from this, if we see the fall which is coming in, that has been considerable, and from lifetime highs, if we see, Bitcoin has fallen by 71%, Ethereum 77%, and closely followed by Binance, which has also fallen by 67 odd percent.
Cryptos. The market capitalization globally was in excess of $3 trillion, now less than $1 trillion. Bitcoin, pretty volatile and hovering around $20,000 a coin, sometimes even falling below that. All of this has made it very difficult for founders and startups engaged in Web3. We saw that also in the case of VAULD. VAULD, which is backed by the likes of Coinbase, Peter Thiel's Valar Ventures, has suspended operations on the 4th of July. We're talking about suspending deposits, withdrawals, and any kind of transactions. The VAULD founder on LinkedIn, on Twitter, said they'd seen a run of nearly $200 million. That's the kind of withdrawals VAULD has seen since 12th of June. And because of that and the financial challenges it's facing, it had to suspend all operations. It's hired legal advisors, including Cyril Amarchand Mangaldas. It's looking for a white knight. It's going to be talking to courts in Singapore for a moratorium of sorts. And it raised $27 million just last year. It had to also lay off 30% of its workforce. There are many people who have lost their hard-earned money, their life savings in cryptos. There are many who may have also made a lot of money in cryptos. But this is exactly what we're going to be talking about. The carnage that we're seeing in the crypto world. Clearly the world is in a risk-off mode. Joining me, two guests. We've been joined by Nikhil Kamath of Zerodha. Doesn't own cryptos, never invested in cryptos, has always cautioned against cryptos. We're also being joined by Ashish Singhal of CainSwitch, one of the largest crypto exchanges that we have in the country. Thank you, gentlemen, for being with us here on Startup Central. Nikhil, I'll come to you first, only because you've been pretty consistent when it comes to your stance on cryptos. We've seen quite a bit of flip-flops with many around the world, but you always stuck your neck out and said you don't understand it, you're not going to invest in it. So when you hear the stories, maybe like a VAULD, maybe a platform which even promote lending on cryptos, what is it that you always tell your friends, your family, your peers when it comes to cryptos? And when you see things like this, what's your reaction?
Well, Nantha, to a certain extent, outside of the debate of whether it is a good asset class or not, I think one thing we can agree on is the inherent leverage in this ecosystem was quite high. And maybe the prices of a few months ago had run up too much, and to many people looked like they were not justified. I don't think any asset class can keep going up forever, let alone that asset class being cryptos. So I think the correction was largely warranted, and I don't feel like it is a bad thing. We've gotten lucky in India with the regulator coming in and making it harder to buy crypto. I think, kudos to RBI, SEBI, the finance ministry, whoever was involved with that decision, because a large part of the fall, retail mindset typically is when something is falling a lot, they tend to, borrow, buy a lot more. But I think they were not able to do that because it had become significantly harder for them to fund their crypto wallets and stuff like that. So the RBI definitely got that spot on. But where we sit today at $19,000 or $20,000, I think the question is drastically different. Solvency is definitely a concern today. I think there's another key question of what is the cost of mining today versus the cost of a Bitcoin in the open market. And if the cost of mining is significantly higher than the cost that Bitcoins are trading at, how long before the miners have to take a break? Because these are large capex organizations and they put in a lot of money towards their mining operations. So that would be a interesting phenomenon to watch, and at some level I would assume that would determine price direction in the near future as well.
So Ashish, before we get into the cost of mining, where the price of Bitcoin, Ethereum, etc. are, first up, like I said, the world is in a risk-off mode when it comes to cryptos. You've also had to tackle from 1st of July the 1% TDS. There's a 30% crypto tax. Volumes were down, and with this kind of prices globally, I would imagine volumes have fallen even further. Give us a sense of what's happening on your platform. How much of the volume is down by?
Yeah. Sure. So 1% TDS has certainly impacted the trading volume across the platforms in India, right? But I think the important question is whether users are trading less frequently or if the trading has moved to the grey market. In India, KYC compliant exchanges and platforms are complying with TDS with enhanced transparency to aid users with their annual returns. We've always said that taxation is good for an industry, but excessive taxation could move users away from compliant crypto exchanges, and I think that is what we are seeing in the market today. The purpose of the TDS was to establish a trail of the crypto transactions which exchanges happily want to comply with. The same can be achieved with a lower TDS withholding, which incentivizes users to stay on KYC compliant exchanges and within the regulatory purview. But what we are seeing now is that user trading volume could be moving to the gray area, to the non-compliant exchanges itself, which actually hurts user protection. User protection and tax compliance can coexist as long as the taxation gives enough incentives to the users to stay on the KYC compliant platforms.
But give us a sense of how much the trading volumes are down by. Before 1st of July, before the TDS had kicked in, the 1% TDS, we were hearing whether it was from CainSwitch, whether it was from a Vizier X, whether it was from a Coin DCX. At that time, they were talking almost a 70% drop in volumes. What is it now? 80%? 90%? Because even the prices are not supporting.
So exactly, right. So it's hard to tell what is the contribution of the taxation and what is the contribution of the market. What we are seeing across exchanges is about 40 to 50% drop. But that could also relate some part of it to the market conditions itself, and some part is definitely contributed by the taxation.
Nikhil, the question I also want to ask you is that when you hear stories like that of VAULD, which are not allowing withdrawals, we'll ask Ashish in a bit whether CainSwitch has also, had to halt withdrawals. There are reports of Coin DCX which had also halted withdrawals. You work with a different asset class, which is equities, which is still far more mature than cryptos, but still has a long way to go in India when we look at the penetration. You and your brother Nikhil and the entire team at Zerodha have taken it upon yourselves to also educate investors, particularly the first-time investors. So when you hear about a new tax that might impact trading volumes, a new tax that might lead to grey market transactions, What is it that you think of? Because equity investors have no choice. They still come into the market, and it's not as if they wouldn't want lower taxes.
Yeah, I mean, there is even banter today of long-term capital gain taxes going up. I don't think taxation alone will ward off people from coming in to invest in equity, uh, because at its scale, it's still one of the only places where one is able to protect against inflation. And you're essentially buying the companies, the profit-throwing companies, the largest of them in the Indian ecosystem. You're buying a small portion of them when you buy into a listed equity. There is a lot of compliance. Each company which is listed has to put out its balance sheet every quarter. There are investor calls. These companies come out and defend their earnings, their future plans, all of that. Uh, I think a lot of that, in my opinion, right? Like I keep saying that I shouldn't be the skeptic of something I'm not an expert of, but I might not be an expert on Bitcoin or Ethereum or anything else like that. And they have a tangible business which is open for each one to interpret. I think makes a huge difference.
So Ashish, come in there, because you have also decided that on your platform you weren't going to have the highly speculative world of non-fungible tokens, NFTs. You had made that very clear. You as a platform have also stayed away as much as you can from leverage, and from loaning against cryptos. That must have been based on some kind of decision, some kind of thinking that how you will survive in a down cycle.
Sure. So first, let me address the point that Nikhil made as well. I think it's not the taxation that crypto industry is worried about. It is mostly the TDS, right? Uh, Holding 1% of the entire cell value when in the equity market, that percentage is 0.02%, and that is why it doesn't hurt the stock market investors, but it hurts the crypto investors. And I think that's the fair point that we want to send across. That can we be made equal to the stock industry and give equal opportunity across these asset classes, right? Coming to your point, Nantara, regarding different business models of different companies in the crypto space, right? Crypto industries has several business models, and some are inherently riskier than the others. And obviously, right execution of a business model can break or make a company. And we are seeing that in happening over the last few weeks, that many crypto companies have perished because of the insolvency that existed, because they have taken higher risk on the products that they were offering to their users. Let me talk about CoinSwitch. CoinSwitch enables users to buy and sell crypto with a small fee. And that's it. That's our business model. We do not lend crypto, offer interest on crypto deposits or balances, or reinvest users' crypto, ensuring the safety of user funds, right? And user also need to make sure that they're choosing the right platforms when they're coming into crypto investments without falling into the trap of lucrative offers, which may be, too good to be true in some cases. So ensuring that they're investing with the right company and the company is taking the right measures, reducing the risk in the market, is very, very essential at this point.
Nikhil, do you have anything to say to that when Ashish is also making a case that cryptos are being taxed more unjustly than equities?
Well, I agree with him there. I think that 1% TDS kind of kills the market, as would be the case on any other asset class. I think you have to go back to what the intention is. If the intention of the regulator is to not let the crypto industry thrive in India, I think what they have done has achieved that outcome. But then, when you go back in question, has it helped the retail public that people have not been able to buy crypto in the last few months during the fall? The answer there is yes too. If not for this, and if not for the volumes falling as much as they have, more retail would have been kind of sucked into the fall and kept buying all the way down from $60,000 on Bitcoin, for example, and net net it would have been bad for the ecosystem. See, this is in many ways, this is also the problem. Maybe this is a benefit of crypto, but also a problem of crypto. Like for equities, you have a depository who checks if your shares are actually there. You have a regulator, you have an exchange, you have SEBI, you have RBI. All these guys check to the extent that, if a broker is holding a certain amount of client funds, they keep checking that the funds exist, that there is demarcation, those funds are not being used for something else. There is so much compliance in place, and a lot of that does not exist in the crypto world. And one would it's easy for me to say, if these rules and if these checks and balance were implemented, people might have more faith on crypto exchanges and the likes. But that also takes away from the use case of crypto in a way, and what makes it different from equity markets to begin with. So it's a very complicated problem, or a complicated question to answer. I don't think it has a binary yes or no kind of a thing. But I would say, what works in favor of equity is the tremendous regulation, which kind of makes sure that client capital and client funds are secure.
Okay, fair point. Now, Ashish, coming to another point, when you see a wall-like instance, and I will say this for our viewers, and CoinSwitch has said it, repeated on Twitter, it's not providing any of those kind of products like VAULD was. VAULD, which has had to suspend its operations, is not providing you loans against cryptos and all of that. But Ashish, the problem is now, you all talk about having tens and millions of depositors, right? All the platforms say this. There is no protection for them. So when you have a vault-like instance, and I'm not talking specifically about vault, but when withdrawals are suspended, a couple of your platforms have suspended withdrawals. I'm not sure if CoinSwitch has. It would be great if you clarify it for us. My point is, who is going to protect the depositors? We don't have a waterfall. What happens to their money?
No, and that's a very fair question. By the way, just on record, we haven't closed withdrawals, and we will not close withdrawals unless there is a banking channel issue rather than an solvency issue at CoinSwitch. So we'll continue to operate normally like we are operating today. Coming to your point on what can happen, how the regulations can help the crypto industry. When the stock industry was set up, I think these were the same problems that plagued stock industry as well. Today we sit after 30 years of stock industry and saying that these regulations exist, and that's why it's good for the users and their protection. I think those are the same regulations that we have been demanding for years now, right? Crypto industry is just 10 years old. It's evolving, and the regulations need to evolve along with the innovation as well, right? And I think we have all asked for the right regulations to be put in place, making sure such instances do not happen. Companies follow those rules and restrictions, making sure that the user's money is protected at any given point in time. And we are all in favor of that, right? But it's a new innovation. We have to accept that fact, and new rules and regulations need to be built up to protect users in the crypto industry. While companies like us are taking all the precautionary steps, we cannot ensure that everyone in the industry would do the same, right? So although there might be 95% of the good players out there, but there's still 5% of the players which might do anything that they want to, right? So to protect our users, we need to make sure that the regulations are in place, which are equal for every company to follow, and every company follows the best practices, ensuring user protection.
And Nikhil, isn't that something which we need to talk about? Well, the Income Tax Act allows taxation on even illegal sources of income. My point is that when a government is also collecting tax on an asset class, which it has not decided as yet whether it's going to recognize, not recognize, whether it's legitimate, not legitimate. The very fact that the government is aware of the kind of money that's going into cryptos, the government is aware of the number of people going in, which is why it wanted to come out with the tax as well, and to establish a paper trail. The same government should also have some laws for protecting these very users and depositors, because there is no protection. We don't know what's going to happen to anybody who has invested in cryptos on any exchange or any platform, any product that may fail.
Yeah, so Nayantara, I was looking at the documentation around Tether, around some stable coins and some of the exchanges, especially the ones outside of India. And if one reads the fine print, a lot of these guys, they openly claim that during a sell-off, they can stop withdrawals, and, they can kind of like halt trading and all of that. So one has to be really sure of what exchange and what bridge they're using and what stable coin. The concept of a stable coin. If they don't disclose what is backing and what has happened to the money which has gone into it, one would argue how stable it really is. But people really need to do the research to figure out what route to pick. Uh, in terms of tracking and compliance on Indian exchanges, I think the very USP of crypto in a way is the decentralized nature of it. So I would presume it would be a lot harder to track and have the same kind of compliance around, say, Bitcoin or Ethereum as it might be, with a share of Reliance, where you have KYC on the buyer, the lender, where the exchange is, the route it's taking through a broker. I don't quite see how you could have that level of compliance on something which is far more decentralized, and you often do not control both sides of the transaction. You don't view both sides of the transaction in a way.
Fair point. Ashish, I'll give you the final comments. You're today also gone on Twitter to talk about how you're different and differentiated from other crypto exchanges because you don't offer interest on cryptos, you don't allow lending on cryptos, and like I said, you've anyway not gone down the path of allowing non-fungible tokens. I'm not saying NFTs are bad. You've just always tried to stay to the core, which is just being a trading platform for all kinds of coins that you approve of on the exchange. How should a depositor identify an exchange? Because Nikhil is making a very pertinent point. Not in India, but maybe overseas, there are disclosures made that there could be a reason to stop withdrawals if there's a run on the exchange.
No, so Nikhil is absolutely right there, and regulations aid that path. And until those regulations come in, I think users need to look at the credibility of these exchanges. What are the products they are offering? Rather than looking at if, say, somebody is offering 20% interest on your deposits, looking at how they are actually generating those interests. Looking at behind the scenes, what are the risks that they're passing on to the users while giving them, exceptional rewards. That's why CoinSwitch has stayed away from such products and have always been transparent with its users in defining what we do, how we do, and what are the users' liability in those scenarios, right? So making sure that the users understand these platforms, know that they are always investing with credible, companies out there, choosing the right products to invest in, understanding the underlying risk of any product, any crypto product that they are using on any exchange or any platform out there, right? So I think these are the few things that a user could do before the regulations are put in place. But ultimately, regulations have to be there. Regulations have to play that role that every company who enters this space have to follow certain rules and regulations, making sure that they are protecting their users to the best of their abilities, right? So final solution is regulation, but until we get there, I think user education, and a user has to put in that effort as well in understanding what they are getting into and who they are investing their hard-earned money with.
We put a lot on the depositors, but Nikhil, I'll give this one to you. You're talking about an exchange that had convinced the PayPal founder, Villar Ventures, to invest. It had convinced the likes of Coinbase to invest. I don't know whether regulations alone are needed, but a lot more needs to be done. Now there's reports coming out of how social media influencers were paid to talk about VAULD. This is the dirty side that's all coming out now.
I think something has to be done about that, Nayantara. I think social media influencers, be it Matt Damon or be it all the people who have gone out and said, invest in this and make a guaranteed 15% or 20%. If somebody has a financial gain from kind of like selling a certain product or a service, there has to be a financial liability on them for kind of like, when these things do not work out. I don't think it's, I don't think, I don't know how people will regulate it or how they would put a law around it, but I don't think it is right for savvy, financial, well-to-do minds to go out and tell people that, invest in this product and you will get 15% a year guaranteed through crypto, or you would, something on those lines. I think that is terrible and something definitely needs to be done about it.
Let's hope we start to see certain regulations that come in, one has to think of all the depositors who put their money in cryptos are not first hurting from the kind of crash that we've seen, but now when you're also seeing financial failure and seizing of operations, VAULD of course being case in point. Thank you gentlemen for being with us today on Startup Central.
Thank you.
We're talking about cryptos and depositors who've lost their money.